Hello and welcome to December 28th. We have an exit profit on ATVI at 49% in 8 days. Let's go look at that chart. Here's the thing. We have set up here on a channel breakout right there on that black line. That black line is my intermediate. It's not my short-term channel price channel. And we entered here on this date of the December. Oh, I forgot where I put my where did I put my there we go, data box. There we go. Okay, so we entered, we set up here, we got entered on the 21st of December, and we got stopped out today at 3 to 1. So I had it set up for an automatic 3 to 1. So let's review the amount, and then we're going to review what we could have done, what we did right, what we did wrong, and what could we do better. First of all, we got out with 70. We got out 49.3 in 8 days. $70 on 4 contracts came out to 280 minus $5 in fee roundabout. 275 in gross in net profit for the trade with a 16.18 owed. Now a new owe of 13.53. Okay, what did we do right? We set up to our rules and we set up our exit of 3 to 1 and we took it. Now you notice also too, these lines are coming up. I am using the standard deviation at the time of entry to project the inclination or the angle of attack of the price. And here is the expiration. This expiration was in January. So we are already out of the trade. This is the 21-day, January 21 expiration date, DTE. And I extended it out to get my angle of attack, excuse me. And then I have my 3 to 1 ratio. I'm going to risk 1 unit to make 3. And then I've said the cross points, and I anticipated this to happen on January 12th. Well, as it happens, it took off, and we are already out of the trade here on December 28th. So we are approximately 15 days ahead of schedule. Now, that's what we did right. What we did wrong was this, and that is that we did take the 3 to 1. We didn't let it run. Seeing this strong inclination, this way we could have gone last bar low and gone for more profit. Of course, this takes a risk. This could turn around and come back down again. The stochastics was indicating to be an overbought territory, but the RSI is still in very good sweet spot of approximately RSI on a 14-day at 60 value. That was bad. So what can we do better? It's one or the other. It's either to take profit off the table, and you take profit off the table, you can get into this trade back in again. There's nothing that stops us, so we can go back in, and that could be the better part. Would be the point will come down to is what is the rate of that such a situation will continue, and the last bar low will actually produce more profit. All right, going forward, what is the plan? Next plan? Well, we already here, and then the my short-term price channel is been qualified for a new entry. I can put up a new trade right here, and depending upon what the options will be when we go to look at that, that's one possibility. The other possibility is now that we're getting very close to 2 weeks within the expiration date of January 21, we could be looking at the butterfly. Now, I was looking at a butterfly possibility, and it came out to $14 with a 236 return, providing that I hit here on January 21 at approximately what the value there? The value is coming back at 69 and a half. So 69 and a half, if my butterfly hits right in the zone, then this could be a very good lucrative return. I really tend to do my butterflies approximately 2 weeks out. So I would be looking toward maybe January 7th to see if I would like to do an option, because I couldn't find any weeklies on this. So there it is, the report for ATVI that we got in. We got in at 142. We got at 212 on 4 contracts and producing a $70 per contract. Oh, also notice too, that's another thing here in the data. We did a delta 25. Now this goes back to that theory from the online mastermind group of Fridays 1 o'clock. They will be returning back January 7th of Lisa and Lori. And that's when they brought up the point about doing taking a multiple contracts on the lower delta. The reason why is that what you're doing is that instead of getting a 25% move on the dollar for every dollar move, you're now getting 4 times, which was 4 contracts, which makes it virtually a 1-to-1. So the option moved the stock moved $1, and we got $1 in return according to the theory. Well, it must have worked because we are out of this trade, and we are out with a profit, and the owed is now dropped to 13.53. So that's what we'll be looking at. So let's go look at that possibility. So in that possibility, we would have to go and look at our trades, our trade setup. Oh, right here, trade. And you can see I've already been considering the idea of a butterfly. And I'm looking at a target of, I was looking at that target, I'm still looking at now. Oh, that's another thing. This, I have to change I have to change the inclination. Yes, it's now changed. And now all this has to be moved over. So now I pick up this, and then there's my target there now. And we're looking at $74 roundabouts. A new 3-to-1 would go, let me go ahead and add a new 3-to-1 here based off this. And the new 3-to-1 is there at 73.558. And I would put that there. And the cross point is very tight. Cross point is very tight. So, but that would be a butterfly. I mean, that actually would be ideal, because what get into this zone here, the butterfly would pay off quite handsomely. So it's going to, let's go and quickly look at a possible butterfly, and that we're going to be looking at the 73.5. So we got to come over here and come down and look for 73.5. The closest expiration is January, still January 21. And we do not have a 73.5, but we have a 72.5. So we'll start off there, and we come here by butterfly, and I will then go and see what the possible returns are before I get in. And it says it's going to cost me $23.60 estimation with a 229 return. That is good. That's within my wheelhouse of 5-to-1 to 10-to-1 return. So that said, we go edit, and we'll set up the butterfly. But now in the butterfly, because we are in aftermarket, we have to go to GTC. And on GTC, we have to go in here and say, okay, this closed today. This closed today, and bring the data box in here again. This closed today at 66.67. So we will say that price is greater than 66.68. Give it 1 penny. And now this butterfly is legally ready to go off. And now we're looking at 72.50, which is here at expiration. 72.50 right there. We'll be looking at that. So now that crosshair is here. But for a butterfly, we really want to be close. We want to be closer to here. And that would be it. Okay. So let's send this one to market for now. Let's see. We have 12,069. Let's see if the market is going to give me that cost. Oh, before we can do that, we go ahead and do we have to do the form. Also, I like to take a snapshot of my setup. So there it is, and I'll do a snapshot using the snap. Oh, I don't like that. Let me do that again. New one. So I have to capture all this information. And there we are. We're going to capture all that information right there of our potential butterfly. Right there. Butterfly of 68.66 ahead, expiring on 21 January. And we're looking at it 72.5. And then we'll hit send. Oh, and butterfly. Butterfly, DTE, January, and the parameters are 70, 72.5, and 75. Okay, and send it. And there it is. And now it dropped to $45, and it was $269, so it's in the ballpark. It said it was going to be like $26, and that is very close. Okay, with that said, I'll conclude today's report and what happened with ATVI as a winner, and we'll catch you on the next one. Thank you very much for stopping by and checking it out.